Hi, good evening, everyone. Thanks for taking your time to join us in our webinar. Today, with me, I have Victor, who will talk about the free lunch in investing. And I am Theresia. I am marketing for SquirrelSave. So I'll hand it over to you, Victor.
Thank you, Theresia. Good evening to one and all. Welcome to the new normal, but I think it's also very efficient. Today's session will try to end by 7:30 p.m. so that you will have enough time for dinner if you haven't already had dinner. Okay, welcome. I know the topic is a free lunch in investing, and if you're expecting us to serve you lunch, I'm afraid this is the wrong meeting. It's a metaphor in investments. Here you'll see on your screen, SquirrelSave, and I'm the founder of this company, and we actually want to bring the right way to invest to everyone, which if you look at today's world, in an extreme sense, the rich and the well-off can enjoy all these value-added investing services, but those with lower income and even those with no knowledge, you can't get access to such investment services. So there is a reason why the income gap or the wealth gap is widening across the whole world. So this is part of my agenda to bring financial inclusion to as many people as possible, starting, of course, in Singapore, where we're already pretty well off. You can see the website and the QR code. I encourage you to have a look. And now I'm going to just do a quick introduction of myself. If you don't know my background, basically, there are only three things you need to remember: investments, insurance, and healthcare. I have run such companies, but particularly in the context of turning them around and improving their business model. As a result, I have learned quite a bit that there is one common thing linking investments, insurance, and healthcare, and that's you. And the important thing about that is your data, not personal, private type of data, but the data to help you live to the fullest in life, in terms of growing your wealth, in terms of protecting yourself, and in terms of keeping yourself as healthy and to live as long and full a life as possible. So without further ado, I just go down to the topic. Today, I'm going to share with you the only free lunch in investing. And as I said, it's not an actual meal. If you look at this picture, you'll see a lot of horses. Now, if you're not familiar with what horses look like from the rear, this is what they look like. And on these horses are what we call jockeys. And to the extreme top right, you can see the grandstand. And what you're seeing is a horse race. So why am I showing you this picture after talking about lunch? Well, in investing, many of us have been actually doing this. We have been horse betting. We are betting on what may go up, and for some, they're betting on what may go down. So my point to you today is that when we say we invest, we have actually been betting or gambling. So if you look at my screen here, you can see 4 quadrants. To the top left, in shaded red, you can recognize that there's a lot of data. Well, on the top right-hand corner, you can see there's also a lot of data, a lot of symbols. And to the bottom right, wow, it looks like a stock market with all the prices. And to the bottom left, you can see all the latest statistics, looks like financial reports. But I tell you, the only one that is to do with finance and investing is on the top left, the one ringed in red. And that is from a typical Bloomberg investment screen. The other screens are all about horse betting, right? The top, bottom right, and the bottom left. They're all horse betting. The one on the bottom left is basically saying the weight of the horse, the class of the horse, the time of the last race, the distance run, how did they do in the last race. It's an analysis. So what I'm trying to show you on this screen is that although I've told you that on the top left-hand corner, the screen shows you investing, I'm trying to tell you that the investment screen is not much different from a horse racing screen, where in investments, we have analysts like I used to be. where we analyze a company and then tell you to buy or sell, the stock or horse analysts do the same. They look at horse, they time the horse races during the trials, they look at the jockeys as they weigh in, and then they say, these are the odds and these are the horses you bet on. So what I've learned in all my years of training is that I might as well go to the horse races instead of investing. So that is something to think about. Here on this screen, basically investing is nothing more than luck, all right? And some skill maybe, but almost pure luck. Because you may not agree, but I say for sure, based on data, based on evidence and psychometric testing, when we say we invest, I can guarantee you, you are not. And it's a mathematical conclusion. So why am I so confident about this? Because when you say you invest, I guarantee you are betting, speculating, or gambling. All right? So why? Why am I saying that? And I can prove it mathematically. Well, you don't have to go to mathematics just to take a look at real live people. They happen to be young, but when we were younger, for those of us who feel we're old, we used to do other risky things. But look at these young people or people who take risk. Why? Because they like the risk they're taking. All right? They enjoy the risk they're taking. And for those of you who don't identify with the younger set, maybe you can look at this picture. All right? We do funny things in the pursuit of happiness, right? And the truth is, we don't really see the danger or the risks when we are enjoying the moment. And that's how we invest or gamble. And this is the mathematical proof. And I'm not using math today. I'm just showing you that we chase returns before managing risk, which is not investing. That's gambling. And a simple anecdotal piece of evidence is that if I came to you and said, look, John, I have a very good investment idea. What do you think? 9 out of 10 times, the other person would ask, really, investment? What's the return? And that is the beginning of our problem. It should not be about the returns. You should be asking, what is the risk you're taking me through to get that return? And if ever you get another approach from a bank, relationship manager, or a salesperson selling you a product, whether it's insurance or investment, I bet you they're going to say, you know, you've got to take higher risks in order to get higher returns. When you hear that, I would advise you to ask him, why aren't you telling me the other 50% of the story? Which is higher returns means higher losses. And they don't tell you that for a good reason. They're selling you a product for which they're going to get paid handsomely. They're selling you a product because they are under a quota. So this is the real ugly truth about financial services. For you, an unsuspecting investor, you may end up gambling or worse, buying something you don't really need. So investments has a totally different meaning from what most of us think, which is returns. It is not. Investing is about risk and managing the risk you're exposed to. But let's not beat ourselves up over it. I mean, we're all human. So the mathematics is very clear. As humans, we can't calculate beyond a certain extent or beyond a certain time frame because we're limited being human. But a machine can calculate massive volumes of data in a split second that a human cannot. All right? So risk is quantitative. All right? Returns are emotive. So humans tend to look at returns because we are emotive. But when I ask you to look at risk, you'll say yes, but you won't know how to calculate or rate risk because it is not humanly possible. Now, let me give you a real life example. In the world of juggling, all right, how many balls can I teach you to juggle? I give you 2, you'll drop a few, but within a certain time frame, very short time frame, you can juggle 2 balls. I give you 3, 4, and most of you can master that with some time. But beyond that, 5, 6, 7, people are going to find that there is some innate limitations, or for some, they have some skills which either prevents them from juggling more than 6 balls, 4 balls, and some people have no problem doing 8, 9. But my point of this slide is we're human. We have different capabilities. We are of different emotive backgrounds and makeup. We're not the same. The ultimate mathematical point is, do you know how many balls the best human in this world can juggle? I'll give you some homework. You can go and Google it as I speak, but please do not get distracted from what I'm sharing with you. The point I'm making is that humans are limited, but we are of different varying skill sets and affinities in emotions and so on, and our interests. But even in the world record of juggling, whether it's 11, 14, or 17, the answers are different. Why? It's because of the definition of what juggling is. All right? Some people say juggling means how many balls can you keep in the air at any one point in time? Some people say how many balls you can keep in the air continuously. So again, what I'm saying is that in the investment world, in the financial world, please be careful about the definitions, because with the different definitions, you could be talking about 2 different things, yet talking about investing. So today, my topic and focus is we're human, we are not equipped to manage risks, and the real investment is about managing risks. But we are emotive, we only look at returns. So what can we do about it?
So juggling's pretty hard, at least for me it is. But once you get to 3 balls, there's this natural question, right? It's like,
Not sure whether
4,
sounds easier.
5, what's the limit? This guy definitely knows.
Hi, I'm Alex Barron, and I hold the world record for most balls juggled.
Teresa, can you hear the sound?
That's 11.
Yes,
I also hold the world record for most balls flashed,
Thank you.
and that's 40.
That's right, Alex has flashed 14 balls. A flash just means throwing a certain number of balls in the air and catching that many balls in sequence one time. Here he is flashing 13 balls. But is 14 balls the limit? Today we're going to look at why juggling 15 balls
Okay.
might be almost
We're not going to
impossible.
be doing much more juggling tonight, so I'm going to skip that. But I just wanted to demonstrate to you, even in the world of juggling, the definitions are different, and so it is in investment. What you're staring at is a lot of food, and it's supposedly free. But in investment, the free lunch is diversification. This is the answer, and it was coined and popularly promoted by others who believe in what Harry Markowitz said. He won the Nobel Prize for Economics in his mathematical representation that in investing, it is very important to diversify. And by diversifying, you get extra returns. So this is a very important point. A lot of people are not diversifying, so you're getting returns based on luck. Whereas if you mathematically diversify, there's an extra return that you get from the market. And that is what I wanted to share with you today. But we're human. How do we do that? So good news, we have created SquirrelSave, and we have put the brains using artificial intelligence, but wrapped around it with an easy user interface. So anyone above 18 years old, pre-university students, can open an account with SquirrelSave. And if you're below 18, parents can open for the child and sponsor the child. And that's how we have designed it, because it has taken the headache out of investing. But if you want to trade or gamble, you have the casino called Marina Bay Sands or Resorts World. I have to be fair to both in Singapore. And you can go to the horse races, or you can go to the biggest casino in the world. It's called the stock market. So here at SquirrelSave, we are not trading or gambling, and we're not taking bets. We are practicing the art of diversification, and we have overcome the human shortcoming by using artificial intelligence to do this. And that's what I wanted to share with you today. If you go to our squirrelsave.com.sg, you will find that we have simplified it, that you get your own personal portfolio for as low as $1. and you'll have a globally diversified portfolio, which 20 years ago when I started stockbroking, this is not possible. You could only invest in your home market. But today, sitting anywhere, all right, even at a bus stop, you can invest in the whole world through SquirrelSave for $1 and upwards. And it will be managed for you 24/7. You don't need to make any buy-sell decisions. Just decide how much to deposit. What is the risk setting important that you want? And when you want to withdraw, you can do it anytime. But my advice in investing is to keep it there for at least a year, if not 3 years, without the need to worry about volatility. And that should be your investment money. The rest of it, you can go and gamble or trade. And some people even told me at the last webinar, you can go to the Toto and buy Toto. Yeah, but here we are not gambling. The next thing I wanted to share with you is what we do is to make global investing easy. We do not need investment knowledge. You have no decisions to make every day. We do all the work 24/7 because our machine does not sleep. Unlike myself, when I used to be a fund manager for clients, I would sleep and I would play and I would have downtime and I would have my moods. And so my decisions are not consistent, but I always tell you it is. That's a lie. Today, I cannot do that anymore because in those days, that was the best I could do. But today, I have a machine and therefore I have stopped managing money for clients. I've invented this whole interface with this AI machine to do it for me and for you. Start with any amount, just know yourself.
Investing is never simple. So much information, too many products. How do you protect your assets? SquirrelSave solves these problems for you. Tailored to your age, assets, and investment objectives, SquirrelSave provides a personalized asset management solution. Works 24/7 for every stage of your life based on your needs. The transparent SquirrelSave algorithm is built on Markowitz's Nobel Prize-winning modern portfolio theory. Your tailor-made portfolio will be diversified across different investment markets with exposure to domestic and global assets, seeking returns while mitigating risks. Our machine learning AI algorithms have been trained with more than 12 years of past data and 3 years of real-time market information. SquirrelSave goes beyond traditional static asset management by adjusting to real-time market changes in line with your personal risk profile. By dynamically allocating across asset classes with low or negative correlations, SquirrelSave controls volatility to preserve and grow your wealth. We deliver good risk-adjusted returns consistently. We make low-cost investing available to everyone. We innovate by using AI and machine learning. We make global investing easy for everyone. We create value for you. No knowledge needed. Simply decide your risk profile and we do the rest. More than 12 years of training, tracking 574,000 real-time global factors and analyzing over 21 million data sets. Presenting your personalized portfolio in seconds, covering 5 continents, 15 asset classes, 35 countries, and over 2,000 products. SquirrelSave. Smart investing for anyone, anywhere, anytime.
So that basically explains our technology. But I'm just going to give you a more basic representation. Data, all right, is what brings AI alive. AI on its own can't do very much. In finance and investment, we have lots of data, and we focus on price data. And then we use machines to actually analyze the data which is beyond human capability. The data point we take is just one data point, which is the price of any investment or security. And basically, from point A to point B, the distance in time and the difference is what we call the return. And how it got there, the maneuver by which it goes up and down, is what we call volatility or risk. So surely you want to get a return from A to B in a straight line. It would be very, very nervous, and you might end up having motion sickness if it's very volatile, a roller coaster ride. And that's called volatility. So by understanding how we use one data point, we can generate information about return and information about volatility. Can you imagine hundreds of thousands of stocks and investment securities in the world. How long would it take for a human to actually track that? But a machine can do it in real time. So that's how we used it. And by tracking the volatility of different instruments, our machine is able to find a combination like a pizza where something that goes up is counterbalanced by something that goes down in terms of risk to achieve as flat as possible a risk curve. All right. And we then match that risk curve to your risk setting, because you said you're able to take on a scale of 1 to 10, you can take a roller coaster ride of a scale of 3. So we find a combination of securities whose volatilities will match your score of 3. So that's how we match these real-world portfolios in real time to you. Here you see our machines calculating risk, and risk can be 3-dimensional: length, breadth, and height. But in mathematics, this can go beyond dimension of 3. It can go to 4, 5, 6, 7, 8, 10th, and the nth. Humans won't be able to visualize it, but machines can. So our machine's goal is at the highest level to predict if markets are going to be a bear or a bull. It's either a 1 or a 0. And within this 1 or 0, we have different grades of 1s and different grades of 0. And we use machines to do the market condition prediction first. Following that, we pull data from a data lake. We have product data about all the investment products out there, people's subjective views, economic data that's announced, your customer data, trading data. And then we have a factor layer. We have technical factors, fundamental emotions, and on the product issues. And then we have our strategy layer. We have principal component analysis to remove those that are unnecessary. We have SVM support, vector machine, AI, to look at whether things are likely to go up or down. We have factor analysis to see at which point in time whether price earnings is more important, dividends are more important, or interest rates, and so on. And we have client profiling, which is your risk profiling that we do. And then we have your goal analysis. And then at the front is what you'll see on the SquirrelSave page, all the different types of products for saving for your education, retirement, just building up wealth, and so on. And this is just a representation of our mathematical models that do different things. You can have the same data distribution, but our different mathematical models can make sense and see patterns. And that's basic AI behind your facial recognition, etc., that's going on every day in your lives in Google search and so on. We are not in a black box. We are a very transparent algorithm because we follow the traditional investment model of looking at asset classes like equities, bonds, and so on. But we also have sectors. And what we do is we find products like ETFs that represent these sectors. And our machine then does the factor analysis. We look at all the data, and then we analyze which factor is going to be more important. So think of us like a weather forecaster, and then we'll say you should have perhaps you should bring an umbrella and so on to protect yourself from the risk. And here we then superimpose it on Markowitz's modern portfolio theory, which essentially looks for the highest possible return for the risk you want to take. So this is all the mathematics. In other words, our formulas and all that are open book. It's transparent. It's not a secret. The AI, however, has been learning and has reached a certain level of sophistication. And the best way is to judge it by its results, which I shall share with you. Finally, we represent the actual performance of our machine versus the CPF. The CPF is supposed to be for your retirement. And so we compared the retirement products that are offered by the CPF, which is the blue line, and then we modeled our portfolio for the mid to high risk range of products. And the graph clearly shows that we outperform if you had started investing with us since 2004. And I want you to know this, investing is not short term. You need a time horizon, I say 1 to 3 years, to ride out short-term market volatilities. If you do anything less than 1 year, we do not accept a customer. They should go to the horse race or the stock market casino. So that is very important to share with you. And I want to now show you the performance before we close off. This is very important to share with you because we can now show you our AI behavior and performance through the COVID-19 crash, which happened in March. During March, from February 19th to March 23rd, we saw a huge crash across the whole world. And the S&P 500, which is the largest stock market in the world, 500 of the biggest stocks in the USA, dropped 34% from the 19th of Feb to the 23rd of March. So as you can see, it was just straight down. It was very nice, right? And then it dropped. What happened? What happened to our portfolio? Now, I started a portfolio in June 2019. I founded the company. I was the first client. We beta tested our account from June, and we launched finally in August 2019. That's last year. So I'm going to show you my personal portfolio. The first client of SquirrelSave experienced only a 10% drop, while the S&P dropped 34%. All right. So this graph was produced for the S&P as well as my portfolio on the 18th of May. But you can see that I had enjoyed a ride. This was in February, and then since then, in March, it came all the way down. But the drop was 10%. The US market dropped 34%. My portfolio dropped by less. And that is the free lunch in investing, because we diversified. And in this case, humans can do it, but they won't do it as well. So we use machines to do it. Now, let me show you, all right, the recovery. This is, again, 18th of May. You can see that the S&P, having dropped 34%, as of 18th of May, from the 23rd of March, was still 14% below its 19th February peak. Now, let me show you my SquirrelSave account. By the 18th of May, in the same time frame, I was only 1% below the peak. The S&P was 14%. So what I'm trying to share with you is diversification doesn't mean poor performance. It means good risk management. And because I drop less, I don't have to climb as high in order to make back the losses. And by then here, I was back to 1%. Now, bear in mind the numbers. I had deposited in June 2019, 15,000, all right? In March, February, I was about 16,000 plus. And by 18th of May, I was 15,887, short of my peak, but definitely making money. So this is a true result. Now, let me show you something else. This is a $15,000 portfolio. You can put whatever amount you want, but to get advantage from the AI, I would recommend 15,000 or more. But here is today's portfolio, which is dated, all right, 18th of August. So my portfolio, all right, is now 17,344 as of the 18th of August. As of 18th of August, it is a very aggressive portfolio. I started in June 2019 with 15,000. It reached 16,000 in January this year. So that was a 7% return in 8 months. Or if you annualize it, I was doing 11%. That's not bad. But the market crashed, right? And I recovered 3 months after that. And today, on the 18th of August, my portfolio, the same portfolio, is 17,344, which means I have made a return of 15.6% in 14.5 months, or if you want to annualize it, it is 12.9%. Try beating that. All right, you could, but I think this is much better than putting it in a bank. Here on the right hand side, you can see that it is very well diversified. For 15,000, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 asset classes. I tell you, for me as a former fund manager, it will be very difficult to take 15,000 to break it up into 9 asset classes. It's just too little money for too much work. But because we use a machine, it's not a problem. The second last slide, here you'll see this is a $1 portfolio and it's a conservative risk rating. Conservative. This $1 was started on the 18th of May, 3 months ago, and is now showing you 102. I started with $1. So it's a 2% return in about 3 months. So that's about 8% per annum. And not only that, if you look at the diversification, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So just now, my $15,000 portfolio only has 9 asset classes. This $1 portfolio has 10 asset classes, and it's well diversified. But take note, look at the exposure to gold, 14.34%. Now, I don't think as an individual, I would put so much, but the machine knows something that I as a human don't. And it's done well for me because gold is near all-time highs. Now, let me show you the very aggressive portfolio. I started with $1, all right? And it was started on the 5th of May, 2020. 3 months ago, it is up to $1.05. So it's easy for you to calculate. It's a 5% return on a $1 portfolio. That's a 20% return annualized, all right? And you look at the diversification, it's got 1, 2, 3, 4, 5, 6, 7, 8, 9 asset classes, all right? And it also includes an exposure to gold of 25.33%. So it's really done well, 5% in 3 months. I can't complain. And ladies and gentlemen, I really thank you for hearing me out. This is a portfolio for $1. We're the only automated investment player that gives you a true portfolio per dollar. And we have launched also a product for children because children have the longest time horizon to invest. And we have parents who can actually open an account for their children. So I will stop here and open it up to questions and answers. And I thank you once again for listening and joining us for this webinar and for your patience. Thank you. Over to Theresia.
Okay, so from my side, I received 2 questions. The first one is, what is the distribution cost?
Distribution
and what is the so-called platform fee?
Oh, we have 0 platform fee, 0. All we charge is a flat 0.5%, whatever your AUM. So it is very simple to understand, 0.5% management fee. We, however, are unique in the market. We have a performance fee. We have a performance fee of 10%, which we calculate at the end of each calendar year versus a high watermark. Now, if you're not familiar, a high watermark feature means that we cannot earn a performance fee if we cannot bring you above a previous high water level. So that means we cannot double charge you performance fees. So that is very fair to you. And why do I go for a performance fee? I've been a fund manager and stockbroker, investment banker for many years. I have seen how some of my salespeople charge people a front-end fee for selling a unit trust, 3%, 5%. There was even a case of 7%, which I called the client up and the client told me it's okay, which was just mind-boggling, right? Why would a client invest $100 and have $7 taken away from him before it is invested? I just can't understand people, all right? But there are people like that. I think it's wrong. So in our system, we have 0 front-end fees, no platform fees. What we charge is an ongoing fee, and that's 0.5%. It's one of the lowest, in fact, the lowest in the market, all right? And it's much lower than unit trust. So if you have investments in unit trust, you're paying easily expense ratios of 1 to 1.5% for whether they perform or not. And I created a performance fee because I want people to know that we are not here to be sleeping on the job. We want to perform. And if we perform, you get a profit. And we only take 10% of that profit, which is not something you have originally. So it's not money from your capital. So I therefore believe that a low management fee with a performance fee is fair and aligned with our clients.
Okay.
That answers the question.
Next question is, does SquirrelSave have an investment track record?
Yes. You can see that the investment track record is per account, per individual. Unlike some of you who may be familiar with unit trusts, they are run as a pool. In other words, they run a fund and you all pool your money together, all of you share the same portfolio. In SquirrelSave, I don't want that because with technology, there's no need to pool. In the old days, unit trusts were created because to invest in one stock, you need a minimum amount You know, for Tesla, it's now $1,600 and $1,700, $1,800, $1,900 just to buy one stock, one share. It's not possible to give you a portfolio that's diversified for $1. We have done it without having to pool your money together. So the unit trust structure is an outdated structure. It is high cost and inefficient. For example, the price of your unit trust is only an indication. It is not an actual price. For our portfolio, it is an actual price. Number one. Number two, all right, we do not pool your funds. If you invest $1, you get your own $1 portfolio. As I showed you just now, for that $1, you can see the percentage that I invested for you in gold, in treasury bills, in the NASDAQ index, and so on. You get your own portfolio for $1. So the reference track record is per individual, per account. So what I showed you just now, my $15,000 portfolio, is a track record of a very aggressive portfolio that started in June 2019. And it delivered a total of 12.9% for 12 months. And for the 14 months, the actual return is, I can't remember the figure, was 14 point something percent, something like that. So my point is, we don't have a reference track record for a pool, a unit trust, but we have a reference track record for each portfolio. Having said that, we have created 5 actual portfolios with SquirrelSave's own money. We curated 5 portfolios, conservative to aggressive. And we have those real portfolios using our own money so that now we can actually see the performance of the conservative all the way to the aggressive, 5 reference portfolios. So we do have the track record. What I want to explain to you is that in the traditional world, we have to say conservative, a medium, or high risk. These are nothing more than marketing labels. In mathematics and the investment world, risk is not one conservative, balanced, or high. Risk is actually a continuous line from the lowest possible risk, which is don't invest, all the way to highest possible risk. And this curves, the risk curve shifts up and down. And that's why we need mathematics. And for marketing, we give you the labels, but actually each one of you, when you come into SquirrelSave, every day you're getting a different portfolio when you come in. But when you come in yesterday, today we would change the portfolio. We don't change it for you. We will stay with you on the original portfolio, and our AI knows what is the time horizon you have set. So our machine is smart enough to know that if you are much older and you have a shorter time horizon, we're not going to move you up and down and change you inside out. But if you're younger and you're very aggressive, we are willing to change your portfolio because you have a longer runway to absorb the volatilities that are predicted by our AI in the market. So that is my answer on the reference track record. Yes, we do, but it's more sophisticated than that.
Okay, next question. How much would the performance fee be for your, let's say, the 15K portfolio that you shared earlier?
Right. So that would be 10%. I put in 15,000. It's now 17,344. So at the end of the calendar year, let's say 1st Jan 2020, it was 16,000, right? So at the 31st December, let's say it's 18,000. So the difference is 2,000, right? So it will be 10% of 2,000, which is $200. Okay.
Okay. The next question. Are our investments custodized in our individual names or consolidated custody?
Okay. So we run an omnibus system. So what we do is your securities are not held in your name. Because if it's held in the name, you will have to pay for every single share that you buy or sell. And that will create a lot of cost for you. We have developed trade optimization algorithms. So for someone who came in yesterday and they bought security A, and someone who comes in today and he needs to sell security A. So our system is able to consolidate the trades to minimize the commissions that have to be paid to the stock exchange. So we save our customers money. because of that feature, our securities holdings are omnibus, held at Saxo, our custodian, but we are able to do the portfolio accounting to say client 1 has so many shares of A and client 2 has so many shares of A. So we have that in our system.
Is SquirrelSave using Robo to invest?
I don't understand the question, because to me, in my vocabulary, there's no such thing called a robo. Robo is just a term people use because they don't know what to call it. I think perhaps what you meant is, I don't know what robo is. Most people use a website and they say you can invest by going to a website and they call themselves a robo. To me, that's BS. BS. Why? It's no different from someone who's selling today's product by selling it online, and then they claim to be a robo. What are you selling? Because when the customer, instead of going to a physical shop to buy something, they just buy it online, but the product you have is still the same. So all these portals that sell unit trusts and portfolios using online as a way to sell it and call themselves robo, I'm sorry, that's caveman. What we are doing is very different. It is not the online or the web mobile that's important. It's our artificial intelligence engine that does risk diversification. We're the only ones that are 100% AI. So yes, the answer, if you mean robo as in using technology, we are using AI, not website technology. So in that sense, I hope I've answered your question.
Okay, in terms of withdrawal, how often can it be done, and any penalty or fee for it?
You can withdraw anytime, no penalty.
Okay, I have this question. Invest into ETF, stocks of options?
No, we do not do sophisticated and derivative products. That's very dangerous. It heightens the risk, right? So we keep to simple exchange traded funds, which is being transparent and honest.
Okay, then management fee of 0.5%, is it over monthly period of time, quarterly or annually?
0.5%, 0.5% per annum, per year.
Okay, then the last question we have today is, may I know what is the company invested in ETFs or also include stocks?
No, we currently only do exchange traded funds. To invest in stocks, it's like picking horses. We may do that down the road for clients who want more risk. But at this stage, I want to make sure that we do the right thing, which is to help people get the right returns through diversification using transparent and honest, clean products.
Okay, new question. Is the company approved by MAS?
Yes, we are regulated by MAS under the Capital Market Services license. Yes, we are.
Okay, so that's all the questions we have for now. If you have any other questions, feel free to reach out to us. We are on social media, or you can find our email and number on our website. Oh, okay, new questions. Who are your closest competitor and how do you differentiate yourself?
Okay. We have a closest competitor who started the whole thing 1.5 years ahead of us. They are backed by a family office, so that's really good for them. They do not use 100% AI. They have a human chief investment officer who makes the decisions. This is important to highlight because there's nothing wrong with that model, but it is not fully AI. And the implications of that is that when they rebalance, it's rebalanced to the existing investment model portfolio. In our machine is forecasting every day. It's forward-looking because it's fully AI, so it can do something that human like me can't do. And if we rebalance, it's rebalancing to a predicted portfolio just for you, not for everyone with the same risk label. Conservative is all rebalanced. No, you are an individual in SquirrelSave. So we are quite different from that first competitor. I would say a second competitor is one that started 8 months after us, and they do the same thing, but they don't have AI. They don't have AI. So I do not know how they structure the portfolios, but it has to be human, or someone needs to decide on the weights. Now that means when they rebalance you, it's also rebalanced to a historical, outdated model, right? Until they rebalance it every 3 months or whatever. But ours is every day. And if you're rebalanced, only you are rebalanced, not everybody. So again, we are very different from these two competitors. The second competitor does more REITs. Perhaps that's how they try to differentiate themselves. But we're quite different, yeah.
Okay. Are the ETFs that SquirrelSave is invested in focused in any particular country, sector, or industries?
No, our machine will pick the sector and geography based on its artificial machine learning predictions on what is the best possible return for the risk you are willing to take.
Okay. Any other questions? That's the last question for now. Okay, how do we sign up?
Just go to squirrelsave.com.sg. Oh, I forgot to tell you, we have invented a gamified risk profiling, which I spent a lot of time developing. And I encourage you to try it because it helps you know your risk reward behavior, and it will recommend a risk rating for you. And it will generate an instant portfolio for you. And you can sign up on the spot. That's one. The other way is to download our SquirrelSave app, which is on the Apple App Store or the Google App Store. And someone today just, while in the MRT, they tried it out and onboarded. And you can use My Info, which means you don't have to upload any NRIC copy. But if you don't use My Info, we just need your NRIC front and back. You can take a snapshot and upload, and the account would be processed. So it's in real time. It takes less than 8 minutes.
What's the minimum amount to start?
$1.
Okay.
But don't start with $1 lah, please.
Okay. Any promotion going on?
Say again?
Any promotion going on?
Well, today we are giving away something, right?
Yes, correct. Okay, any other questions before we close off?
No? Okay.
Seems like that's all the questions we have for today's session. Feel free to reach out to us if you have any additional questions. And for the lucky draw, I have noted down every participants that attend our session today. I will email you separately if you win. And yeah, thanks a lot for your time. I hope it's been an insightful session for you all.
And I hope you go and try it out. You can even go and set up a kids goal and set up some accounts, $10, $20 for your children or for your grandchildren. Go ahead and try it out. All right. Thank you, everybody.